Good day, MEC 3702 students. My name is Busi Huma. Kindly note this podcast is not for sporting purposes, but it's to go through key principles within financial analysis topic. Please note of the levels of testing that have been detailed in the Managerial Finance 8th edition. And also, it was also highlighted in Topic 1, Topic Guidelines, announced on the 1st of February 2019. As an introduction, we just need to go through why we analyze financial information. The reason why companies and analysts do ratio analysis is to determine mainly the company's performance, that is, how the company is performing year on year, or when comparing with other industries. When attempting questions, always take note of the industry the company is involved in. This will assist you in discussion type question or giving reason why there was an increase or decrease in the ratio. Another perspective of financial analysis is if the investors will be able to give you more money into your business. Take note of the techniques that are detailed in the textbook and make sure you understand what each of them mean and how you analyze information using these techniques. Now we're going to go to categories. There are various categories within financial information, but we're just going to look briefly at profitability, capital structure and solvency, liquidity, financial market, and investor. So profitability ratio, just take a few minutes and review what you see in the income statement. Can you be able to identify profitability ratios? Are you able to think of companies that you can compare this company to? Do you know of any global impact the company will experience? This is my analysis. I would be able to do changes per line item, calculate GP percentage, net profit margin. Similar companies that I think of is ShopRite, Woolworths, Pick n Pay, and there's many other more within the food industry. Global impacts will be global warming, price increase, petrol, etc., and also international chains, which means what is the impact of BRICS agreements with us in South Africa and the impact thereof. Details are also outlined in the next slide. You can pause at this when you're listening to the podcast and read through these 10 trends impacting the food industry. Now we're going to an example of capital structure. Just want to zoom into one of them, which is net debt equity ratio for 2019. You are given marketable securities, cash equivalent, total assets, long-term loan, short-term loan, accruals, and equity. It's very important to identify which items of financial data it's important to calculate the ratio that you are required to determine. So your ratio that you are required is your short-term plus your long-term less cash divided by your equity. And this is how you calculate it. Short-term plus long-term less your cash divided by your equity. And the total or your answer becomes 11.9%. 11.9%. This represents a level of risk associated with the company's funding source. Generally speaking, the lower the ratio, the less financial risk to the company. That is more attractive for the investors. We're going to look into your financial market ratio. We're going to calculate dividend cover and your PE ratio. So your dividend cover, you determine it by your net profit, which is given, and your total dividend, which is not given. At this point in time, you need to know and understand how would I get to determine my dividend cover, even if I am not given how much the company declared. And you are given retained earnings, net profit. both closing and opening balance of the net retained earnings will assist you in calculating your dividends that was paid for 2019. And then for PE ratio, your formula is share price, which we are given, which is 7.50 divided by your earnings per share. So the earnings per share is not given, therefore you will need to calculate. And take note, which shares are you going to use in calculating earnings per share? You're going to use authorized shares or you're going to use issued shares. It is very important that you highlight the small things that will make a difference when you're doing your calculation and ensuring you are confident in calculating your ratios. So this is how you calculate your dividend cover. Net profit divided by your total dividend. Because we don't have our total dividend, we'll have to recalculate it. So we'll take opening retained earnings plus my net profit. So my dividend paid will be the balancing figure when I take into account the closing retained income. And you get 1.25 times. So also take note the answers or the indicators of your ratios as well. Your PE ratio. PE ratio, as I indicated, is share price divided by earnings per share. So we didn't have our earnings per share given. So we're going to take our net profit and we divide by number of shares issued and not authorized. Take note that at times this information will not be given to you, but you will be required to know how to calculate it. And look at the various examples within your question banks where certain information are not given and you are required to calculate. I hope this was helpful and I hope you are now ready to tackle your ratios. Thank you.